Hello traders everywhere, Jeremy Lutz coming from the digital studios of Market Club. And stocks have turned mixed after the Dow hit 29,000 for the first time on Friday, ultimately hitting an all-time high of 29,009.07. Since then, the Dow's turned negative on the day and has worked down roughly 100 points heading into afternoon trading. However, overall, the weekly picture for the market looks good, and we'll start with the S&P 500. Currently trading with a chart analysis score plus 90, trading at 3,274.10 with a gain of 1.2% on the week after losing a little under a tenth of a point last week in trading. Key level to watch moving forward will be 3,212.03. A move below that level would issue a red weekly trade triangle, indicating a move to a sidelines position. And you can kind of see the last 3 weeks the market's kind of flattened out against these highs. So we'll have to see if that's going to continue into next week. Dollar index bouncing back after 2 straight weeks of losses, up 0.4% on the week, trading at 97.33 with a chart analysis score negative 65, indicating that overall we are still in a long-term downtrend for the US dollar. Key level to watch is 97.70. A move above that level would issue a green weekly trade triangle, indicating a move back to a sidelines position for the US dollar. Dow Jones, the star of the day, trading as high as 29,009.07, currently trading at 28,898.90 with a chart analysis score plus 90, indicating that we are in a long-term uptrend for the Dow, again kind of flattening out against these highs, much like the S&P 500 and NASDAQ. Key level to watch is 28,376.49. A move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for the Dow. NASDAQ is the leader in the clubhouse heading into the end of the week as far as weekly percentage gain, gaining a little over 2% on the week, trading above 9,000 at 9,203.47 with a chart analysis score plus 90, indicating that we are in a long-term uptrend for the NASDAQ as it continues to climb higher. Key level to watch should be 8,909.19. A move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for the NASDAQ. Taking a look at gold right now with a chart analysis score plus 85, indicating that we're still in a long-term uptrend for gold. It's just coming under a little bit of end of week pressures as it had reached ultimately a high of 1,613.30 on Tuesday, currently trading at 1,560.20, up about 0.3% on the week. Key level to watch would be 1,562.40. That would give you a green daily trade triangle, indicating a move back into a short-term long position for gold. Crude oil having a much different fate than gold, down 6% on the week, trading back around $59 a barrel with a chart analysis score negative 60, indicating that we're now in a short-term short position for our crude oil. And here we have crude oil's daily chart showing you that new red weekly trade triangle at 59.62 that triggered on the 9th, pushing the chart analysis score to negative 60, indicating we are now in a short-term short position for crude oil. However, the long-term trend is still up with that green monthly trade triangle in play. Key level to watch would be 60.31. A move above that level would issue a green daily trade triangle, indicating a move back to a sidelines position for crude oil. Bounce out of here, take a look at Bitcoin. Currently up about 3% on the day, with a trading at 8,046.12 with a chart analysis score negative 55, indicating that overall we are in a sidelines position for Bitcoin. Issued a new green weekly trade triangle at 7,692.98 on Monday, indicating a move back to a sidelines position, but it really hasn't escaped that level, trading right around that $8,000 level. Take a look at a weekly chart for Bitcoin. As you can see, up about 7.5% on the week. Our key level to watch would be 6,853.53. Move below that level would issue a red weekly trade triangle, indicating a moving back to a short position for Bitcoin. With that, every success. Have a great weekend, and I'll be back next week with some market updates.